Hey there, this is David Cox, Senior Portfolio Manager at Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, where do we investors stand? It is Friday, February the 21st, 2025. Let's get started. We'll sort off by week here. You can see there's silver up at the top of the list. Stocks had an off week, really sort of flat here, but yeah, lots of movement within there, that's for sure. US dollar index a little lower. Just a reminder, as usual, pause your video player at any time for more details. Let's look at the S&P 500 here. And at the top here, we're going to talk about market breadth before. I've shown this chart before, but in the middle panel, we've got the percentage of stocks over the 50-day average, right? So how many of the stocks out of 500 are over that 50-day moving average? You can see that's about 58%. But more importantly, we had the breadth peak earlier last year on a percentage of stocks over the 200-day, and we've come back above 60%, which to me is a pretty important line, often looked at from technician standpoint as being a pretty healthy market, 60%. So it's nice to see that kind of recover. But again, where breadth goes from here is interesting. I've marked on the prior peak there in 2021 when we had a rather harsh breadth peak, which of course turned into deterioration eventually. Let's look at stocks and gold. So this is, again, I do lots of relative analysis. I've shown you this kind of stuff before, but just take a look at this. So in 1999, if you sold the S&P 500, if you just take the value of the S&P 500 and you divide by gold, you would have received about 5.5 ounces of gold. Well, today, if you do that, we've just made a lower low on here relative to prior months here, and you only get 2.1 ounces of gold. So again, what that means is that an investor that sold gold back last century, for that matter, in 1999, has a lot more gold in their pocket than the one who sells it today. So again, I would just encourage you to realize and think, who's better off? So get to Argentina stocks here. Argentina stocks have been all the rage the last couple of years, and ever since that election with currency stability, that has been a positive thing. So these are weekly charts. These are weekly uptrends, everything from utilities in the top left to energy in the top right, banking in the bottom right, and there's the ETF itself. You can see that is clearly, these are all in uptrends. Again, there's bullish candles in development through Thursday's close. So again, something certainly I'm watching. Let's look at really harsh movement. This is what happens sometimes. I mean, this wasn't even earnings. This is Axon Enterprises, a very large cap stock here, AXON in the US. That is definitely, after making new highs on, I guess, Tuesday, stock reversed rather harshly. I think it was down 16% on Wednesday, followed through with another 8, I think, at the close there yesterday, and that's 24%. So a quarter of the value of this company is just kind of gone, right? $14 billion has evaporated in the last 2 days. And supposedly, right, I say that kind of tongue in cheek, but it's from a downgrade from some analyst I've never even heard of. So either way, the bottom line is supply and demand, right? That is what is important for us. And the other thing that's very important is that this is a daily chart. So let's zoom out and see what we see. This is Axon on the weekly. So if I was to sit here and try to be negative about this, I certainly have to be able to be. The bottom line is in the bottom panel, we've got the RSI 5. We've got a very clear bearish divergence where, again, we made lower highs into a price high, a marginal new price high that just took place earlier this week. And again, so what we've got is essentially what looks like a reversal at those prior December highs. We've now got massive kind of movement on the MACD, obviously because the movement's been so significant. You can see that's a multi-year low here on the MACD level. And so again, short term, of course, oversold. At the same time, again, risk has to be managed, and our clients know that and expect that of us. Let's look at a couple of in-sync things here. So on the left side, we've got the energy sector. I'm using XLE today, but you can see underperforming in the last couple of years versus the S&P 500. That is a relative downtrend if you look at the bottom left. On the right, we've got Cheniere Energy, LNG. Now, this is in an uptrend, first off, right? Absolutely in an uptrend. And on the bottom panel, we've been outperforming for the last year versus the XLE. So again, relative strength, absolute strength, that's what we want to see. So this is what we would call one of the leaders. This does happen to be an in-sync universe stock as well, which means it has outperformed the S&P 500 on a 1, 2, 3, 4, 5, and 10-year time frame. So look at breakouts. DraftKings broke out, I guess, a week ago or so, and it spent the last few days pulling back, right to the line. Nothing unusual. It's always nice when breakouts get bought that they just go straight upwards. That does not always happen. In this market, there has been lots of this activity again, and again, just emphasizes the challenge. When we have breadth that has deteriorated some, and again, I just showed you it's improving some, but at the same time, there's a lot of movement on individual stocks. Even though the volatility index doesn't show it, there is lots of movement. So we do have to certainly always manage risk and be aware of what's going on in our portfolios. Let's look at Carpenter Technology. This is actually from the materials sector. And again, this is an uptrend, right? This is in the top panel uptrend. Bottom panel, we've got relative to the S&P 500. That is clearly an uptrend. This recent pullback, we're certainly interested from a buying perspective and put a position in the All in Sync portfolio. You can see the fundamentals. They just reported 95% year-on-year earnings growth. That's pretty solid. And again, Carpenter Technology, CRS, and you can see 4 quarters of rising sponsorship. I love that. And again, uptrends will always take precedent over fundamentals, of course, because the charts, again, bake in all that information and much, much more. Now, just to point out that in sync universe stocks, just because we can, stocks beat the universe or beat the index rather on a 1, 2, 3, 4, 5, 10-year time frame, that does not mean they can't fall. In fact, right now, we're sitting at 34 of those stocks, okay, that met the screen on December 31st, are all below a 34-week moving average. Now, why 34-week? Well, that tends to be the last line in the sand here that I tend to use from a trend following perspective. If something hasn't been stopped out by the time we blow through the 34-week, bottom line is, it's probably been sold earlier. This is Toll Brothers. I'm just picking on it because the home builders had been very, very strong coming off of the 2022 lows. Again, really defying the rise in interest rates and defying a lot of investor expectations, if you will. You can see there's a circle has got a 34-week crossover. So that would be the large picture, the big picture, long term that I look at in terms of a crossover. So that's a bearish positioning. Same thing happened in 2022. So the trend is now down, right? We've got lower lows and we got a lower high there. And so again, this is characteristic of the other stocks in the industry group. Either way, I've just shown you for the last month here, you can see some of the drawdowns and you can see, again, 34 stocks out of about 130 have negative 34 slopes. Again, I ran this poll on Twitter this week. I thought I'd throw it right back at you, right? So again, the Canadian dollar versus the US dollar in the last 40 years. And you can see here, the most popular answer was down 17%. And, one of the least popular answers was minus 2.1%. The correct answer was, yeah, the Canadian dollar is down 2% in the last 40 years, really not down at all. And so from that perspective, again, it's an encouragement to always be aware. The narrative, the headlines, they do kind of, they draw us in, right? And sometimes they are misleading from the perspective of being able to understand what's really going on, right? The media always wants to try to explain everything, but it is often more important to sort of get ahead of that, if you will, and look at price itself. Let's finish off with Sector Watch. There's the energy stocks I did touch on, having a good week. And then on the bottom, we've got Canadian technology and staples and whatnot. Lots in between, but still lots of green on here, despite the volatility I already spoke of in individual stocks. Please follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.